Hello, I'm Harnam, and I'm here to present Property Talk with myself, Harnam. I've decided to start off my series of videos aimed at buyers, and particularly those buyers who are buying for the very, very first time. And so often, one may speak to friends and family, and they make it sound so simple. Just phone an estate agent, phone a private seller, jump into your car and go view the property. If you like it, buy it. Unfortunately, the reality is not so simple as that. In the real world of buying property, you have to plan, you have to prepare, and you have to also pre-qualify yourself. It is possibly one of the most important decisions you're ever going to make in your life. And it's not like going out and buying pots and pans. It's not going out to buy an insurance or an investment product. It's not like going out there to even buy a motor vehicle. This is much bigger than that. This is possibly the single most important investment decision you're ever going to make in your life. So you have to plan, you have to prepare, and you have to pre qualify yourself. And as I said, with anything in life, it comes down to preparation and planning. Can you imagine an athlete going out into the Olympics, or even a music artist scheduled to perform internationally without even preparing or planning? I want you to picture that in your mind. Yes, undoubtedly a recipe for disaster. Hence, there are some critical questions that you need to ask yourself in order to prepare and plan yourself. How do I plan to finance the purchase of my new home? You need to know that. You need to understand that. Will it be a cash purchase? Will it be a finance through a mortgage bond approval via the bank? Will the purchase be subject to the sale of my existing property? Are my funds tied up in my existing property? Do I have money available for the transfer costs? And if I'm buying subject to a mortgage bond, then do I also have money for the mortgage bond costs? Remember, there's two parts to costs. There's the cost to transfer the property onto your name, that's the registration and transfer costs. And there's also the bond costs, which also applies if you are taking a bond. And sometimes, quite often, a bank may require a minimum of 10% deposit. So that's a question you have to ask yourself. Do I have the money to pay a deposit should the bank require that of me? And further to that, do I, as a buyer or a potential new home owner, do I have the means to be able to pay the monthly municipal rates or the body corporate levies if I'm buying into a sectional title complex? So, as you can see, these are questions that you really need to sit yourself down, possibly with your partner, your spouse, whoever you're planning to buy property with. And you need to ask yourself these questions. As I said earlier, it's not as simple as just rushing into a car, racing off to see Sunday show houses, open hours, or possibly to make an appointment with a private seller or an estate agent and just buying something that you like. You have to think the process through carefully. I aim to walk you through the different options or the different questions and scenarios that I've just presented to you. And it does give you food for thought. So let's start off with the one where you need to consider financing the purchase of your new home. There are several options which are available to you. The least complicated, obviously, being a cash purchase. Because if you have cash, it's a matter of paying the cash, and the purchase price is secured by means of cash. But then you need to be sure as well as to what is the source of that cash. Quite often, I come across buyers who need to cash in an investment to finance their purchase. I highly recommend that you speak to your financial advisor or bank or whoever is managing your investment portfolio and be sure as to exactly when the investment is going to be available to be cashed out or when those funds can be released to you so that you can coordinate these dates in the sale agreement. Otherwise, you may find yourself in breach of the contract. Because if you were to say, I'm going to put the monies down on a specific date, for example, the 26th of January 2022, then the monies need to be available. Failing which, the seller will deem it to be a breach of the mutual contract between yourself and him or her. In the event that you don't have cash, then the other option available to you is applying for a mortgage bond approval via a bank, via your own bank or via any other bank who would be willing to lend you money. You can deal directly with your own bank, but I highly recommend that you deal through a mortgage bond originator. And the reason why I say that is if you're going to do it on your own, and if you're going to want to be open to different options with different banks, shopping around for different interest rates, so you can imagine the amount of time and effort it's going to take for you to go individually to each bank, submit a set of documents here, then submit a set of documents there, then submit a set of documents to Bank C, and then submit another set of documents to Bank D, and so on. And it's going to be a repetitive process with each bank. Whereas if you choose to deal with a mortgage bond originator, then they will shop around obviously on your behalf, but it's a one-stop shop. You do it's a one-stream process with the mortgage bond originator, and they will submit to all the different banks, and then you're going to be spoiled for choice. Then you can choose the best interest rate, and you'll be surprised. Quite often, your own bank won't even give you the best interest rate. Now, I'm not a mortgage bond originator, but I can assure you I've used them previously, and it's definitely to your benefit. And here again, you need to pre-qualify yourself. The worst thing that you can possibly do to yourself. And I see this so often. I don't know why buyers tend to set themselves up for disappointment. You need to know exactly how you're going to finance a property. If it's going to be subject to a home loan approval, you're going to be setting yourself up for disappointment if you don't speak to your bank or, as I said earlier, to a mortgage bond originator to check whether you qualify for the bond amount that you require, whether you're going to be comfortable with the monthly bond repayments, and so forth. Picture this scenario again. You jump into your car, race off, see a property, you love the property, only to discover that you don't qualify for the bond or you can't afford the bond repayments. So what you've done is you've set yourself up for a huge disappointment. And I've seen this so often. So please speak to your bank or speak to a mortgage bond originator and get yourself pre-qualified. And it's so simple nowadays. Most financial institutions or even estate agents have on their website bond qualification calculators. And you can also check whether you qualify and what sort of bond and transfer costs you may be open to as well. But do remember, when you do those checks online, whether you qualify for the bond and what the potential bond repayments are and so forth, these are still going to be subject to the bank's risk and credit assessment. So be very mindful of that. And then there's another option, those buyers who still need to sell their property. They often want to purchase, but that purchase has to be subject to the sale of the property because that's where the funds are tied up in. And I come across numerous buyers jumping the gun and rushing off to view properties without using their existing property as a starting point. And my advice always is to conduct a market assessment on your home, where you're living in, the current property that you have to sell, and then put pen to paper. But when I say putting pen to paper, I mean in respect of your current property, by doing a net proceeds estimation. A net proceeds estimation allows for the deductions of any selling costs. Example, if you're using an estate agent, the estate agent's fees, the if you have an existing bond, any bond cancellation fees on that property. Obviously, the bond balance itself that has to be settled on that property, and the costs of compliance certificates for electrical compliance and for the entomology compliance. And there again, in relation to those compliance certificates, you need to allow for possible repairs. Maybe electrical compliance may detect, the inspectors may detect that some repairs may need to be done. So allow for that as well. This will then give you a guideline as to the amount of funds you will have available for the purchase of your new home. So it gives you a sense of confidence. It gives you a sense of buying power so that you don't make any rash decisions. You may also discover that you may need to top up on the purchase price of the new property that you're planning to buy. So, for example, you may be able to release 500,000 Rand worth of funds from your existing property, whereas the property that you need to buy may be 850,000. Just using examples here. So then the shortfall is 350. Then you may need to top it up in the form of cash, or you may then need to apply for a mortgage bond through your bank or through a mortgage bond originator, as I said earlier. My recommendation is to firstly have your property on the market before you go out and start buying a property, or before you go and sign for another property. If you want to be taken seriously by estate agents, if you want to be taken seriously by potential sellers or sellers of property, here again, don't set yourself up for disappointment as well. Show some level of commitment from your side. If you know that your property needs to be on the market first before you can buy the next one, because the monies are coming from that property, then guess what you have to do? You need to put your property on the market first. If you don't find something you like, you can always withdraw it from the market. But your starting point should be that you need to have your property on the market first. For any other seller to take you seriously, that you want to buy their property and your property is not even on the market, and yet you want to buy their property subject to the sale of your property, which is not even on the market yet. You would have noticed that I made reference to costs in this video, maybe two or three times. And the reason why I just want to bring that point up again, I want you to understand that you need to be prepared. You need to be prepared, and I'm putting emphasis on the word prepared, that there will be transfer costs applicable, whether you like it or whether you don't. That's the reality of this of the purchase of property, which you as a buyer will have to pay. Nobody else is going to pay that, not the seller, not the attorneys involved in the transfer, not the estate agent, but you as the buyer will need to pay the cost, regardless of whether you are buying the property cash or whether you're buying it via a mortgage bond. And this is to transfer the property onto your name at the deeds office. These costs are payable to the transferring attorney who are handling the transfer of the property from the seller's name onto your name. And they will obviously present you with a pro forma invoice, which will stipulate the exact amount of the costs that are due to them. Furthermore, if you are choosing to buy the property via a mortgage bond, then there too, there are costs applicable. And these costs are payable to the bond attorney who is nominated by the bank who approved the bond for you. And those attorneys as well will issue you with a pro forma invoice separately, and you will have to pay them as well. And the best way to plan for these costs, so a very simple way to plan for these costs, is to visit online portals of the various banks or real estate agencies and access their cost calculators. This will give you a guideline on estimated costs so that you can plan and prepare for those costs. Over and above this, the bank as well may come back and say or request that you put down a deposit to minimize the bank's risk on the loan. This could be a result of your individual credit score or affordability factors. And I strongly recommend that you save up a deposit so that the bank views your mortgage bond application more favorably. Also, it is better for you in the longer run to put down a deposit rather than go for a 100% loan. However, if you do prefer applying for a 100% loan and the bank is prepared to lend you the money for the full amount, that is a decision you have to make. But I advise that you take a very, very calculated risk yourself in going for a 100% loan. In my experience, the minimum required deposit is often 10% of the purchase price. So try and save towards that. Quite often too, I come across many purchasers failing to plan for monthly municipal rates. And if you are going to buy in a sectional title scheme, then over and above the municipal rates, you need to also plan for levies. And many buyers fail to see the reason for that. So, all I can say is, in addition to your bond repayments, be prepared that you will have to pay the municipality at least on a monthly basis or on an annual basis for the municipal rates on the property. And if you're choosing due to a lifestyle reason, maybe a lock up and go, that you want to buy in a sectional title complex, then you will have to pay the body corporate levies as well. And if the information is not available before you sign for the purchase of the property, always request for this. Don't go in blind, because it's going to assist you in your budgeting, in your planning, and you don't want to suddenly discover after the purchase of the property that over and above your monthly bond repayment, you're now liable for an additional possibly 2,500 rand, anything from 1,000 rand to 2.5. It could be any amount, but you need to be ready for that. So I trust that you'll find the information that I've just presented to you useful, and that it will encourage you to give careful thought into the preparation and planning before you rush off to view homes. As I said, the worst that you can ever do to yourself is set yourself up for disappointment. Once again, imagine finding a home that you simply love and you want that property, but you cannot buy it due to your own lack of planning and pre-qualifying yourself. Make the time. You owe it to yourself. It's a big decision. Don't rush into it, as this is the single most important investment decision you will ever need to make in your life. Go about it in a practical manner, in a methodical manner, and trust me, you will give yourself that peace of mind. And when you do find the property that you absolutely love, you're fully prepared for it. So look forward to my next video. If you found this video of some value, and I'm trusting that you did, then please subscribe to my channel. This is my very first video for this channel, and also like this video. Thank you so much for watching.